Hey guys, you've joined us live on Moneycontrol. I'm Manisha Gupta and I'm going to give you a roundup of commodities as we have seen this week. It has been a data-heavy week and the markets are reacting to a steep fall in the dollar index from its 11-week highs. We also have seen the US debt ceiling go through at least until 2025 and that seems to be adding some premium to prices, at least in the case of metals there. So this is a week where we are looking at all metals closing this week on a positive note. Apart from the strong strength coming in from the US Department there, it also has been the strong economic data that we saw come in from China. There is now a 74% chance of Fed not hiking interest rates in 13-14 June when they meet. And then it is also about the Chinese stimulus which the street expects could be coming in this week, weekend or the next week. And that has kept the sentiment on the higher side here. The US non-farm payroll data, well, that comes in the evening today, which is also expected to be positive, is the reason you have seen support for many of these commodities here. Also, the individual fundamentals seem to be playing their role. So we have seen copper prices gain up as well. There is low mine supply growth and that has been supportive for copper. For aluminum, it is going to be smaller smelter capacity that we have seen being reported from Europe and China, which is keeping the prices on the higher side. So when you look at this week, gold and silver are up between 2 to 3%. You have copper prices up by 2%, same for aluminum. Zinc has seen the minimal of gains, up by 0.5% for this week, but steel is up 4%, iron ore is up 6% as well. So good going for the metals in this week after weeks and months of decline that we have seen, especially in case of industrial metals. People believe that bottom perhaps is close to place. Most of the negative news has been factored in. Street, of course, will watch out for the US non-farm payroll data and then the US Fed meeting on 14th of June. Until then, it's going to be slightly choppy, but sell call is something that is not advocated. That's about metals. Energy as a sector is going to close another week in the negative. So the crude oil prices, while they have rebounded from their 17-month lows, but they still are down 3% for this week. We have seen the US inventories gain up by nearly 4.5 million barrels and the product inventories are in the positive too. The OPEC and allies meeting on 4th of June is now in focus on what Saudi Arabia and Russia talk jointly there. If you look at the natural gas prices, well, we are trading at a 1-month lows onto this one as well. And a 10% decline in this week is what we are working with. When you look at the US natural gas inventories, they are 30% higher on an year-on-year basis. And they are nearly 16% higher on a 5-year average basis as well. So that continues to weigh onto the market. The weather is not so bad. The natural gas demand is not so strong. And that continues to weigh onto the market, with street believing that natural gas still has some downside remaining, but the crude oil prices could be stuck in a range for the next 1 week. Of course, depending on what happens on 4th of June, that is when the OPEC and allies meeting is.